to give you just a brief overview of the program. The name of the program is Good Grant Practice Virtual Academy Program. And this program is intended to strengthen the capacities of institutions in the areas of financial management, human resources, procurement, and governance. And in terms of approach, we in this particular project, we'll apply a holistic approach, which is aimed at equipping institutions, mostly research institutions and universities, with the tools and knowledge needed to enhance the GFGP certification or go through self-assessment process in order to improve financial management practices. And we are going to apply a consolidated approach of which is in 3 parts. The first approach, of course, is on training. And in terms of trainings, we are going to combine a blend of self-paced courses and in the virtual academy and also virtual sessions. Also in person trainings and workshops, which will be complemented by webinars like the one that we're having today. And then another approach is technical assistance, where we are going to employ a one-on-one mentorship approach and virtual consultations to support organizations which are in the early stages of implementation of GFGP. So in this particular approach, we're going to have organizations who are early adopters who have already maybe completed certification or in the final stages to mentor the other organizations who are in the early process of GFGP. And the other approach is community of practice, where we have a platform where we connect institutions to exchange knowledge, share experiences, and collaborate regularly to continuously improve grant management practices across institutions. So in a nutshell, I think that is a quick overview of the project. And I hand it over back to our moderator, Anne. Thank you, Anne.
Thank you, Gift. You can learn more about the project. I've shared a link in the chat. And I would like to welcome Duncan Gatoto. He's the head of corporate function at APHRC. And Duncan, please take over.
Thank you, Anne. I believe you are seeing my slide.
Yes.
Okay, so for today, we are going to be covering strengthening internal controls in grants management. And in terms of introduction, my name is Duncan Gatoto. I'm head of corporate function at APHRC. I would like to start by just giving a brief of myself, even as I delve into strengthening internal controls in grants management. I joined APHRC in 2003. That makes me about 22 years old. Before that, I used to work with Deloitte and Touche as part of the external audit for 3.5 years. So APHRC is my second employer. And just to speak about the background of what I'm going to be speaking about, when I joined APHRC, I was basically the only accountant with a supervisor who was covering part of the finance and other areas. Currently, I have a team of about 20 accountants. So you can see the growth from 1 person to 20 in finance. We were about a $1 million operation. Now we are $52 million operation. We used to run less than 5 grants. These days, currently we are doing about 150 to 200. We were a 1 million about budget organization. Now we are talking about $52 million in 2025. So that's in saying this as a background, I'm coming from a point where I've seen and experienced what role strengthening internal controls in grant management means. So maybe I can remove my video for purposes of being clearer. So in terms of the topic for today, I subscribe to a book that speaks about the importance of preparing the foundation. Actually, the statement reads like, prepare your work outside, get everything ready for yourself in the field, and after that, build your house. This is a proverb. I wanted to say this to emphasize the importance of internal controls. The way I see internal controls in organizations, it's very foundational. You may look at it like if you are building a house, how do you go about it? You'll take a lot of time preparing the foundation, and then from there, you then embark into the building work when you're sure your foundation is solid. So, and that's why even as you seek funding, some of the documentation that the donor would ask for would include your policies and your policies to just see how is the foundation of this organization, what runs these organizations, and policies and procedures are all about internal controls. So that's in terms of foundation, and I really want this session to be participative. So feel free to raise up your hand and engage me as I move on. So in terms of the content for today, we start with an overview of what internal controls are. Then we'll touch on the 4 pillars of internal controls, the importance of internal controls, examples of internal controls in grants management, arguments and counter-arguments on internal control, benefits and limitations of internal control, and then we may dwell more and put more time in institutional practices that contribute to weak internal controls and best practices in internal controls. Maybe as we begin with the definition of what internal controls are, I would like to welcome you to, maybe in 1 or 2 words, what keywords do you think would be included in definition of internal controls? So I'll let people just post what you think should be integral in the definition of internal controls in an organization. Let's do it first so that we can move on. Accountability, that's CRISPR's, monitoring, integrity, systems, accountability, integrity, systems, policies, compliance, governance, structures, risk management, processes, policies, risk management. I think you can see a bit of a consistency in some of the terms that people are putting down: compliance, risk management, lay down procedure, compliance, transparency, accountability, order. I like that. Processes of project management, guidelines. Yeah, thanks. Those are very good contribution, protocols, guidelines. Yeah, and and in putting forward the definition, you'll see how the words that you contributed there really speaks to what internal controls are. The definition I have here says internal controls are systems, which people have already pointed out, processes and procedures implemented by an organization to ensure the accuracy and the reliability of financial and accounting information, promote operational efficiency and ensure compliance with relevant laws and regulations. That is a definition from Corporate Finance Institute. You can see the agreement with what you already know or encountered in the course of your work. So examples include segregation of duties, authorization and approval processes, physical security measures, reconciliation of accounts, all speak to policies and procedures and systems, and all again geared towards accountability, transparency, as you have pointed out. So thanks for that contribution. Moving forward, I would like to speak about the 4 pillars of internal controls. We have detective controls. These are controls that are designed to detect errors or irregularities that may have occurred. And for example, examples of these are reconciliations. You can do reconciliations between, say, your cash book and the bank statement. It could be a physical verification of assets and what is in the books. It could be comparing budget and actuals. All of this will detect errors, will help you detect errors and irregularities. The second pillar is corrective controls. These are designed to correct errors or irregularities that have been detected. Once the errors, irregularities have been detected, it's good to have a system of ensuring that they're dealt with. And examples are having disciplinary actions for violations. You may come up with new policies to address the gaps, standard operating procedures also to address the deficiencies. There are also preventive controls. These are aimed to rectify issues identified by detective controls, and they include physical and digital access controls, separation of duties, employee screening and training. So some of these examples will come up in my later slides, and we'll get deeper into them. There are also deterrent controls. These are designed to discourage unwanted behavior or action. And examples are disciplinary policies. You can see the penalty or what action will be taken in case there's a violation. There are surveillance system, CCTV, for example, whenever they are put, the actions that people want to do something that is wrong, you find the probability of them doing it goes down because they know they're being observed. So you can see these controls at work. I want to mention that these 4, I wouldn't say any is more important than the others. It's the way you would look at, we talked about building a house, having the foundation set, and then you have the pillars. All pillars are important. You may have 3 strong pillars and 1 weak one, and it spoils the house. It brings down the structure. So all of them should be looked at in totality and together, not one should be there, another should not be there. So going on also to look at why are effective internal controls important. As a general rule, controls helps to provide what we'd call reasonable assurance that requirements are being complied with in a timely manner and in a cost-effective manner. Perfect does not mean absence, like perfect efficiency and effectiveness, but it takes you to a great level of assurance that things are happening the right way. Meeting this goal involves everyone's work. It's not just a one person. And as you work with the teams in your organizations, these are things that you need to drill into every member. You'll find there are controls to do with finances, but there are also controls to do with how program people do their work. All of them are significant, all of them are important. So internal controls seek to protect the effectiveness and efficiency of operations. They will seek to support the accuracy, completeness and integrity and reliability of financial reporting. It will ensure compliance with applicable laws and regulations. It will ensure protection of organization physical assets and information systems. Just to mention, even when you are undertaking an audit, auditors check you against your policies. You find your policies would have addressed how you deal with laws, how you deal with your agreements with the donors, how you deal with their processes and procedures. So all these what I've written here. They will seek to ensure that you're effective and efficient, and you comply with the law and such. So know that when you come up with internal controls, you will be gauged on how well you're doing in terms of adhering to them. So talking about arguments and the counter arguments of internal controls, you may be in a place where you think, do we really need them? And the reasons you may give may be some of what I've written here, that you have enough staff, you don't have enough staff, so you cannot be able to adequately segregate duties. So what will be the answer to that, if that is your argument? You can have compensating controls to ensure compensating controls may mean having someone review your work. It may mean things like reconciliations and such. All these will help to improve controls even where the staff are not adequate. You may also say it's too expensive to implement internal controls, which is partly true. But even with the level where you're at, it's possible for you to have a level of compliance of controls that will help your organization run efficiently and effectively. That might be take a form of I see, like for APHRC at one time we could afford one internal auditor. As the organizations grow, it becomes important to have more. But if you are able to at your level, you can look at how can I address this issue, even at where I'm at. It may be an issue of recruiting someone who is experiencing issues of internal controls. So they're able to, as they're doing the operational things, they're also able to address the internal controls matters. It could be regularly you have someone come and does internal control checks. All these ways you can address the issue of controls when cost is an issue. Also, the employees, you can say employees are trustworthy and controls are not necessary. This may be true at particular times, but not all the time, because if you're basing, you're not having controls on the staff who are in place right at the moment, those staff can change. And also, experience has shown even the people who are considered trusted have also committed fraud. So that statement by itself is not adequate enough. So it will be important to have a system that is beyond the people in place. But yes, having people who are trustworthy is just part of a good internal control system. And by the way, when you're dealing with auditors or if you've been subgranted, the understanding of the team on the ground by the donor is not the same as the understanding by the CEO or the directors. Then they may have a level of trust on the staff. But convincing the donor that, telling the donor, I have trust, these people I have are very faithful, they are trustworthy. So one person can write a check and present it without any other person, or they can do work without adequate segregation of duties. They will not buy that because they don't know the people you're talking about. Now, I also want to touch on key elements of internal control. Yeah, so internal controls, you'll have the control environment. This speaks about the culture around internal controls. So you'll look at things like attitudes around internal controls, how aware are people, the actions of the management and those in governance concerning internal controls. Board and administrators should demonstrate a commitment to integrity and ethical values. Another key element is a risk assessment. This is how the client identifies and responds to business risks. Management should assess operational risks and develop systems and processes to mitigate those risks. Another element is the control activities. These are activities that management implement to achieve its goals and respond to risks. And when we were beginning, people mentioned policies, procedures as issues that surrounds the internal controls. So other things, control activities will be performance reviews, controls of valuable assets, segregation of duties, all those examples of control activities. There's also information and communication, which is another key element. And this refers to how a company captures processes, reports, and communicates transactions. Transaction information management should use to qualify information to pursue its operational and monitoring goals. So there's a system of processing information. There's a process of sharing information. All these forms a part of the internal control framework. And then there's the monitoring the system, which deals with the management, ongoing and periodic assessment of the quality of the internal controls and need to change, improve, all that, gaps, identifying gaps and such. That's a monitoring system. It could involve teams like having internal audit team that will be periodically and on a rotational basis, checking various issues around internal controls, not just in finance, but in the entire organization. So going to examples of internal controls in grants management, I think it would be good to just have a contribution by the team. You can still type what you think are examples of internal controls in grants management. I'll give you a minute. Examples of internal controls in grants management. Just type some that you know. There is no wrong answer. The segregation of duties, very critical. Thanks, Irene. Actually, that is very foundational. There's a grant office. The grant office will look at things like contracting, adherence to donors, agreements, documentation of procedures, evaluation. All these are good examples. Yes, monitoring and evaluation, checks and balances, expenditure reports, policies and standard operating procedures, approval expenses. I think those are very good examples. I can put up the next slide and see how well we are doing. Probably you highlighted all of what I have here. So thanks for the contribution. So we have segregation of duties. This way we separate tasks to prevent fraud. I can give an example in the payment process, in the cash handling processes. You can have a person writing checks and also making payments. So by having the same person doing that, it opens up opportunities for fraud because someone they're able to direct where the money is going and where the money is coming. So there are many things that can happen between those two ends. So one of the examples of controls would be the person making payments should not be receiving payments. And there are many other segregation of duties. There's people who are preparing. The one who is initiating the transaction is not the one who is approving. The one who is approving is not the one who is releasing. All those are examples of segregation of duties. Another example is authorization and approval processes, where you can have levels of approvals limits, where you at a certain team can approve transactions as to a certain amount, maybe $100. Others can approve up to 1,000 or 5,000 or 10,000. You have a place where the chief executive officer comes in, maybe at 10,000. You also have a place where the board comes in. So you can see authorizations. There are certain levels that certain people will not be involved. All these are there to ensure that there is control over the assets of an organization. There are also physical security measures where you use key and locks. That's very critical for cash and for certain assets. You find the physical security begins from there's a gate, you have a security guard, you have there's a gate, there's the alarms and such. You go all the way to the offices where you still have the offices locked. When you talk about finance office, you find things like the checkbooks or the cash is put in safe. All these you can only access with keys or passwords. There are also IT security measures. To log into an email system, you need an access. To log into a database, you need passwords. To be able to even restore data backups, you need certain permissions. All these are there to ensure that the assets of the organization are safeguarded. The constitution of accounts is very important. The typical one that you know as accountants is reconciling the cash book to the bank. You can reconcile the physical assets, fixed assets to the records. You can reconcile the general ledger to the subsidiary ledgers. You can reconcile what you have in the head office with what the branch is showing. All these are levels of reconciliations. Then there's compliance monitoring, tracking how well you're doing where law and regulations are concerned. Here you're looking at adherence to deadlines and also the laws that are there. Very important is to have these ones also noted in the policies so that it's easy to capture and follow up and ensure adherence. Performance reviews are also another way to ensure the internal controls work well for efficiency and effectiveness, where you identify the performance goals for a staff and assess them periodically. So you'll tag internal control measures with the staff, and should there be any breakdown in controls, you can always know where who is to blame for that. I can give an example of say we've just spoken about laws and regulations. If you are required to pay income tax by a certain day, you can put such a requirement in somebody's performance goals that they're supposed to be submitting. For Kenya, income tax is supposed to be paid by 9th. So you can say by 9th that the income tax has been paid. Should there be failure to do so, then you're able to know where to assign the blame. And of course, staff don't want to be caught in not adhering to the controls. So someone will be looking at their goals and making sure that they are doing their part. And at the end of it, the organization is benefiting in terms of having good controls. So benefits of well-developed internal control systems. It helps to ensure grant funding is properly used for intended purpose. It will help to detect and help prevent errors. The check that I mentioned before, say when you're looking at spending against budget, and this is done, the control says that should be done on a monthly basis. What that does is that should you see yourself running into a deficit situation, you will check and see what you need to do. Like, are you spending on things that you're not supposed to be spending? Also, if you find yourself being left with so much, you may also want to check and see what is not going right. Is it that we over budgeted? Is it that expenditures are being posted elsewhere? So you can see how that benefits the organization, uh, just having that kind of a check. It also reduces the risk of direct and indirect fraud, where funds are diverted for personal and even other uses that they were not intended for. Also, the internal controls will contribute to accounting accuracy and matching of project financial and narrative reports. When you have dimensions in the posting, and you say for each, for you have to assign a project to an expenditure. And then what the system, maybe the system has been set to, if you have to charge a particular grant, the project manager of that grant needs to approve it. So the system will assist. The minute you pick on a certain project, there is a request that goes to that project manager or the PI, the principal investigator, to tell them there's this expenditure that needs to be approved by you. And such person will check and see, is this expenditure related to my grant? And that way, they can only approve it relates to their grant. And that way, it contributes to ensuring that the accounting is accurate and the expenditure match the relevant grants. It also assists grantee in providing timely and accurate financial management reports to donors. I mentioned about how you can tie somebody performance with the associated controls. So for this, you may have, for people who are working with grants, you can document those in their performance plan, that they're supposed to prepare reports by this day, send to the donor by this day. Of course, those days will be borrowing from the grant agreement with the donor. That way, you are breaking it down to a point where it will ensure timely reports are being done and submitted to the donors. It also helps ensure policies, specifications, and requirements of the grants are sufficiently met. And it also fosters donor confidence and comfort that allocated funds are safeguarded and spent in line with the contractual agreements. All these the donor can pick from the policies and procedures of an organization. And they also would occasionally come and see what you've written in the policies. Are you doing that? And the more they see adherence to that, the more they are confident with you, and the more they want to even fund you more, because they can trust you with their money. It also promotes accountability among employees for their actions and responsibilities. So what are the limitations of internal controls? Internal controls will not assure you that you'll be 100% perfect. And some of the limitations are that there are judgments also involved. There are judgments involved in internal controls. So the effectiveness of controls can be limited by human judgment, especially when decisions are made under pressure and with limited information. Breakdowns are other limitations of internal controls. Even a well-designed internal control can fail. Employees might misunderstand the instructions, they may make mistakes, they may struggle with complex technology and systems. Also, management overrides can make internal controls not work. And there are situations that have actually happened where top management override these policies for even personal gains and making internal controls not work. And the biggest of all is collusion. All these things, when you're talking about control like segregation of duties, if collusion is brought into the picture, then it renders such controls null and void, because then you are doing things together, you are overriding them intentionally, and they cannot work. They're as good as staff being trustworthy and doing what is right for them to do. So employees working together can bypass these controls and alter data and other information. Then going to institutional practices that contribute to weak internal controls and fraud risk. So unethical leadership is one of biggest contributor to weak internal controls. Here we have examples of lack of clear policies on grants management. That by itself is not good. When you are entrusted with money, you should ensure that you are a good steward by having clear policies on how to manage these funds you've been entrusted to. No clearly defined lines of authority also, like anybody can do anything. Today, the person making payments, tomorrow will be receiving cash, then another day they will be approving transactions. That confusion will bring about weak internal controls. If you have limited separation of duties, little individual accountability, and missing mechanism for reporting frauds, all these are counterproductive to internal controls proper functioning. Then tolerance of risky behavior. If the tone at the top tolerates risky behavior, then there are bound to be weak internal controls in such an organization. So things like poor oversight in preparation of financial statements, reports are sent to an approver and they quickly sign them off without reviewing. That's poor oversight. It means the staff will get to know this is how the approvals happen. You'll send them and they'll be approved without proper scrutiny, and they will take advantage of such. Inadequate comparison of budget with performance. Here you have a target, but you're not comparing how well you're doing against the target. That is bound to also take you to a wrong end. Lack of human resources oversight in hiring, in pay, in coming up with pay scales and bonuses, missing or substandard personnel appraisal and reviews, poor monitoring of regulatory changes. All these are risky behaviors that can compromise internal controls and bring room for fraud. Inadequate technology also. Information technology is an area that historically has been far removed from grants management function. And these substandard IT security missteps can put your organization at risks. So you can have issues like easy access to computer functions, to computer softwares, to accounting data. You may have missing records, retention policies that are poor, or can easily be lost. For example, if archiving is not good and a donor comes to audit their report, their information maybe for the past 5 years, then that becomes how you've saved, how the IT structure supports that archiving becomes very important. And then lack of formal data backup and recovery plans is also a big risk. Information can get lost in many ways. It could be things like fire, it could be theft. You can imagine if all the information has been put in a laptop and the laptop is stolen, and then you don't have anything to show how you've been operating. That would be a very bad situation to be at. But if there are ways to back up this information, then you can be sure the organization will continue despite the laptop being lost. Then weak accounting controls when you have substandard or inadequate accounting controls and security, it can play a role in bring opportunities for fraud. So here we'll be looking at things like inadequate separation of duties, ineffective monitoring of duplicate payments and vendors, incomplete or late reporting and bank reconciliations, missing review of journal entries, new vendors, and account reconciliations. Just touching on one of these examples, say late reporting and bank reconciliations, where transactions done in January, for example, are being reviewed and reconciled in April. Suppose there was a fraud that happened in January and it's being detected in April, 4 months later, you might find the perpetrator already even resigned and left. So I don't know how you could explain that to a donor, that you lost money, but you're discovering it 4 months later when you are doing the bank reconciliation that you're supposed to have done maybe within less than 10 days after the end of the month. So this is just to emphasize the importance of having strong accounting controls. Poor protection of assets also will occasion loss and also give opportunity for fraud. So assets like cash and equipment, motor vehicles, another property type, needs to have a good way of protecting. And for cash, you need a very good system that will ensure cash is not easily lost. And consistent checks where this is concerned will be important. Like for one measure we use for cash is to have regular, they are impromptu, they are surprise cash counts, and they're supposed to be done in a month. You're supposed to do, controls allow you to do at least once, but to make them unpredictable. That makes the people handling cash know that I can't use this money for personal use. It can be counted anytime. And sometimes some auditors actually would want to come and do these tests, not when they're doing audit. Some can even come in the middle of the year and say, this day, let's go and visit this organization and do a surprise cash count. It may not be as often as that, but there are other, like the internal audit can do such kind of a check. So those checks help protect cash. And also when you're moving assets from one place to another, even from one room to another, it's important that you have checks to monitor those, because the way asset verification is done, they may verify assets according to the rooms. So if they come to do a verification after several months and they find the items they left in this office are not there, and there is no way to show how they moved from that office to another, that also poses a risk and a control weakness. Then insufficient project oversight. As a project team needs to have very good sight of what's happening in the project, and these controls